Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. In this video, I'm going to tell you the 3 dividend companies, stocks that I bought this week. So I hope you guys like this video. If you do, please give it a thumbs up. If you're not yet a subscriber, I definitely want you to subscribe, hit that notification bell as well so you don't miss out on videos that I put out. As always, please remember that this is not a financial advice. This is just me sharing. With that said, let's take a look at these companies. First on the list is Ready Capital Corporation, ticker symbol RC. It is a real estate finance company which engages in acquiring, managing, and financing small business and commercial loan. So in their website, you can also get a little bit more information on them. It's a multi-strategy real estate finance company that originates, acquires, finances, and serves small to medium-sized balanced commercial loans. So they specialize in loans backed by commercial real estate, including agency multi-family investors and bridge as well. So you can see from their website, they do real estate and business lending for small groups, multifamily, bridge financing, residential, and fixed rate lending. Now, if we go to tip ranks, you can see based on their stock analysis, they have a smart score of a 9, which is outperformed. The rating is a strong buy. There has been a insider trading which bought shares. I think you can see it was like 165,000 over the last 3 months. Fundamentals are 12% trailing ones. Technicals is positive. However, the investor is very negative on this one. Yeah. Now, if we look at CNN Business, their price forecast is in the high of $17.50, the median is $16.50, and the low of $15, with the analysis recommendation of 6 buy, 1 outperform. Now, looking at Weibull, based on Weibull's analysis rating, there were 7 of them. They recommended as a buy, with 28% saying it's a strong buy, 71% is a buy. Looking at the price target, you can see their high is $17.50, average is $16.43, and the low is $15.50. Now, if we look also at Google, in Google, you can see what I like about it is that if you go to the 5-year chart, you can see it's been up 18%. Now, if you look at the 1-year chart, it's up 88%. Year to date is up 34%. 6 months, 34%. And then for the 5 months, it's up 5%. So now if we look at Simply Safe Dividend, their dividend safety score make it a 15, which is very unsafe. So that's something for you to consider if this is a stock that you are kind of interested in it. The dividend yield is pretty high at 10%. Market cap is a small cap, which 1 billion. Now, if we look down to the dividend growth, so they have a different last 5 years. They have a different one. They said it's -3, which is a negative. There is no dividend increases or reduction. However, you are going to get paid quarterly, which is January, March, July, and October, with the annual payout of $1.68. Now, looking at Robinhood, I do have about 20 shares of this. My average cost is about $15.42. Total return right now is just I'm up 4%, 4.41. My strategy for this one is just to build it as 125 shares, and then that will be it. I like this company because I think that it is a small cap one, and I like the dividends. However, it is a risk that you probably need to consider if this is something that you will wanting to look at, as based on Simply Safe Dividends, you can see they rate it as a very unsafe. So again, when you are considering this stock, please make sure you do your due diligence. Make sure you understand what you're investing on. Again, all of these are just for entertainment purposes. It's not a financial advice. But for me, I kind of like this one. It is not my major player in my portfolio. However, I like the small companies. I like this one. You know, just for if you look at the 5-year chart, you can see it's up 13%. So um, definitely want to see how far that thing will go in the next couple of months, couple of years. But I will just once I hit 125, that will be it for me. I'm just gonna let it compound based on the drip. So that is my plan for this one. The next one I want to talk about is Gladstone Land, ticker symbol LAND. This is an agricultural real estate trust, engages in the business of owning and leasing farmlands. So you can see in their website, they own farmlands in Arizona, California, Colorado, Florida, Maryland, Michigan, Nebraska, North Carolina, Oregon, Texas, and Washington. So they own about 115 farmlands composed of 89,000 total acres across 10 states. So definitely interesting one. I like this company as well. Now if you go to tip ranks, their smart score rated as an underperform. Tip rank investors is very positive. Now if we go to the analysis, you can see their price target is at the $25 with a 7% upside. The high is 26, the average is 25, and the low is 25. Now looking at CNN Business, you can see their high is up on the 26, the medium is 25, and the low is 21 with the analysis recommendation of 3 buys and 3 holds. Now looking at Weibull, based on theirs, they're also at 7 analysis. They rate it as a buy. However, 28% said it's a strong buy, 28% says it's a buy, and 42% say it's a hold. Now looking at the price target, they say that it's a high of 26, an average of 23, and the low of $16. Now looking at Simply Safe Dividend, they gave it a dividend safety score of 50, which is borderline safe. The dividend yield is 2.27. Market cap is about 698 million. Looking down to the key metrics, you can see payout ratio is a bit high with 98%, which is high for REITs. There is no dividend paid on the previous recession. Looking down to the dividend growth streak, you can see 6 years of consecutive increases, 6 years of uninterrupted dividend streaks. Now, what I really like about Land is that you get paid monthly with the annual payout of 54 cents. So now if we go to Google, you can see based on the 5-year, it is up 110%. And then for the year, it's up 51%. Year to date, 66%. And then the month, again, 66%. For the month, it is down -2%. So, but for the 5-year one, you can see from the chart, it's been stagnant. And then now it's going up. I like this company as well. It is a monthly company that pays you dividends. So great company. And I think, if you look at the structure, they provide land for farming. So I don't think that's something that is going to go away in the next couple of years. Yeah, we're still going to need land to build crops, make and have all these crops for us to use so we can eat. So from that, I think this company is going to continue to be there for us. Last on the list, we're now taking a look at my position. I did start a small position on this one, so it's 5. I am a negative 54. My average cost is $23.90. As you can see at the time of this video, it's $23.77. So my plan is to go as much as 200 shares, and then that will be it for me. I will allow it to continue to do the drip and do the compound magic interest into this. And so that would be my goal, 200 shares, and then that would be it for this thing. Yeah. Now, if we look, the next one on the list is Prospect Capital, another monthly dividend. I know a lot of dividend investors are also liking this company as well. So what is Prospect Capital? Prospect Capital is among the oldest and largest BDCs. So it is a business development company. The company engages in lending and investing in private businesses. So now if we look at tip ranks, at the time of this video, it is at $8 with a smart score of 9, which is outperformed. Inside activity, they have been buying shares, very positive on the investors, bullish on the opinions, and you can see the technicals are 75% momentum and positive. Now, if we look at CNN Business, you can see that the median, it represents a 29% decrease from the price of $8.46 with the analysis recommendation of 2 sells. Now looking at Weibull, based on their 2 analysis, it is a underperformed stock, so they said it's 100%. Now if you look at the price target, they're all $6. Currently it's at $8. Now looking at Simply Safe Dividend, they rate Prospect Capital as unsafe based on their dividend safety score. The dividend yield is 8.51. The market cap is 3.28 billion. Looking down to the key metrics, you can see payout ratio is about 60%. They did cut dividend, and the dividend streak is only 1 year without a reduction. So looking down, you can see the last 5 years, -10. Last 10 years, it's at -6. Uninterrupted dividend streak is 1 year. I like the fact that you are getting paid monthly, so that is that's something that I'm very much interested in it. But the annual payout would be 0.72. Now, if we look at Google, you can see the 5-year chart is a 6%. The year to date is about 77%. I mean, the year to date is about 54%. 6 months. Oh, excuse me. 1 year is about -5%. All right. So now if we look at Robinhood, I did start a position as well. So my average cost is about $8.47. I did buy 10 shares of that, and my total return right now is -0.66. So how many shares I'm planning on getting? I'm just going to probably just get like 200 shares to maybe about 300 shares. But after that, I'm definitely going to move on to other dividend companies. So that's it. That's it, guys. Hope you like this video. If you do, give it a thumbs up. If you're not yet a subscriber, please hit that subscribe button. Don't forget to hit the notification bell. Again, please remember that all these stocks are just me sharing. It's not a financial advice. With that said, thank you so much for watching, guys. Please be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video. All right, take care. Aloha.